Central banks in Europe have raised their key rates to tamp down inflation, while more rate hikes are likely in the U.S. following a recent pause. Experts raise concerns over the possibility of an economic recession. Our business correspondent Shin Ha-young has more.
Central banks around the world are still tightening their monetary policies to tame inflation. The Bank of England raised interest rates by half a percentage point to 5% on Thursday, reaching their highest level since the global financial crisis in 2008. An increase of 25 basis points was expected, but consumer prices during the month of May accelerated at a faster pace than expected at 8.7%, leading to a larger rate hike. The same day, Norway also hiked its rates by 50 basis points, while the Swiss National Bank raised theirs by 25 basis points. Even Turkey has almost doubled its interest rates to 15% after a two-year freeze. Just a week after the U.S. Fed's brief rate hike pause, its chair Jerome Powell has once again hinted that more hikes are on the way, saying there's still a long way to go. With the U.S. Fed and other central banks eyeing more rate hikes, there are growing concerns of a global economic recession.
That is going to make the chances of recession in the second half of the year as well as the next year higher. Also, the consumption and investment seems to have come down compared to, say, 2 or 3 years ago, the pre-pandemic period, and that's in major part because of the rise in interest rates.
He added that these are the reasons to have a pessimistic outlook for this year's global economic growth, which is at a lower level compared to last year's growth rate. In fact, according to the World Bank, the latest global growth outlook for 2023 has been set at 2.1%, which is well below the 2022 growth rate of 3.1%. Meanwhile, the expert says that the Bank of Korea, which has once again frozen its key interest rate in May, is expected to maintain the current level as the country's inflation rate is significantly lower than some European countries and the U.S. However, it may have no choice but to raise the rate when considering the currency market. This is because if the gap between the Fed's rate and the BOK's policy rate widens, there is an increased likelihood of capital outflow and interest rate instability. Shin Ha-young, Arirang News.